So I lost $14,000 on Friday, which is nearly 3% of what I trade with. So it's not a crazy percent loss, but it's a pretty significant dollar loss, especially because I trade with $500,000. With that being said, I shared it on my Instagram story and I got a great message from one of our LPP traders. And he's new, he's just getting started. So when he saw that, he's like, thank you for sharing it. But what would be 3 tips that you would want to share with me based off of your loss to help me avoid those same mistakes that you made? And I was like, oh, that's beautiful, right? Like, why not make that a video? And that's exactly what we're doing here today. So I really hope that you learned something new. If you do, please consider dropping a thumbs up and subscribing. So the first thing that I want to remind you is kind of like every trade is singular. That's the first thing, because my trades Monday through Thursday, we're doing incredibly well. On Wednesday, I had a $30,000 day. On Tuesday, I had over a $10,000 day. And on Thursday, I had over an $8,000 day. So I was coming off of this hot streak. And again, very commonly, when you feel kind of like invincible and you feel like every trade you are taking is going according to plan, sometimes you become reckless. And one of the things that I love to remind myself, and Friday is a great reminder of that, is every trade is singular. It doesn't matter if you made money or lost money in the last trade. It has nothing to do with the next trade that you are about to take. So if you're coming off of a hot streak or a losing streak, I want to remind you, the next trade that you take has absolutely nothing to do with the previous trades that you have taken. The whole point of thinking and taking your history into consideration is just what has worked for you and what hasn't. But I want to remind you that it is so crucial and so important that as a beginner, that you don't begin to build the habit of trading more aggressively the more money you begin to make. Because again, you're always one bad trade away from a red trade, right? The second thing that I want to remind you is I'm going to start sharing my screen. I wish I would have slowed down. So one of the biggest recommendations now looking back is I was shorting Robinhood on the 1 minute time frame. Robinhood, based off previous patterns, began running up. I thought that it was going to go back to retest previous highs right around $20 per share. You could see it a little bit more clear on the 5 minute time frame. So Robinhood was selling off the previous 2 days. This is when I was shorting Robinhood, and it gapped up. And when it gapped up, it came back to retest previous highs right around $20. I saw signs of a rejection and I jumped into it. But guess what? It never broke below the EMA, especially not on the 5 minute time frame. This thing held above the 5 minute EMA the entire day. So I could have taken one step. And this is kind of like, again, a reminder to a lot of beginners. How many times have you taken a trade off of that 1 minute time frame and you regret it because it was an impulsive decision? It's like you took it too soon. And this is where overtrading can really come into play. So what can we do to help aid that? One of the things that I've shared with my LPP students is the idea of using larger time frames when taking your initial trade. So if I would have just, and again, instead of the 1 minute, and trying to take a trade as soon as it, broke above $20, and I thought I got a sell signal, and then it was a fake out, right? So we got the sell signal, we broke below EMA, but then it reversed right back up, right? Because it never actually showed progress on the downside. If I would have just looked at the 5 minute, if I would have looked at the 5 minute, even when it did break above 20 and it pulled on back, we're still far above the EMA line. It never broke below. It never showed progress below. Where in these other instances, right, when we break below that 5 minute moving average, 5 minute EMA, this is an active sell-off. It begins to run up and then it breaks below, right? We get that sell signal on the 5 minute. It's an active sell-off. And it's not going to be perfect. No trade, no indicator is ever going to be perfect. But the whole idea is to kind of slow down, especially if you find yourself over trading or you want to help aid that. And I believe that if I would have just focused on the 5 minute time frame, it would have helped me avoid that $14,000 loss, because I would have never entered the trade because we never got confirmation of the break below the EMA. So that would have been the second thing to take into consideration of next time you take a trade. If you are over trading, try different time frames. Try the 3 minute, try the 5 minute, time the 10 minute, the 15 minute. We have traders that even trade off of the 30 minute. It doesn't matter, right? The whole point is for you to find a time frame that works for you, that encourages you to be selective, because if you are over trading often, then that's not a good habit to have as a trader. The third thing that I want to share is, well, to have a $14,000 loss, it's not just like I took a small position. I went in aggressive, and it's kind of putting 1 and 2 together. So it's all about position size. And when we went back to retest previous resistance levels, I saw that we were testing $20 per share. I got confident based off of my track record of, hey, I've been killing it this week. I'm going to go in with $500,000 and I'm going to short Robinhood, and I'm going to make money as this thing sells back off to $19, and I'm going to make $20,000, $30,000, right? Because if it would have pulled on back from $20 per share all the way down here, it would have been a 5% gain, 5% of 500,000. I mean, we're talking about a $25,000 win. But again, I got ahead of myself and I went in with too much size. How many times have you guys ever done that? When I go in with too much size, just like anyone, I'm human, right? I make mistakes. And when I go in with too much size and then I see that I'm getting faked out and then it begins to go the opposing way, it went the opposing way very quickly because I'm shorting. That means I'm making money as it sells off. So when it begins to go up, I'm losing money. And because I have such a large dollar amount in such a large position size, when it goes up quickly, I lose money even quicker. So especially when I have a lot more money in a position. I'm not sure if this is just me. You feel free to let me know down in the comment section. But when you have a lot of money invested in a position and it doesn't go according to plan, you maybe don't react as quick, right? Because you're a little bit more invested. You're maybe a little bit more emotional. And this is why we talk about position size, position size, position size. I can take advantage of the riskiest stocks. Like I've said, I trade with $500,000. But if I trade something like, let's say AMC, I know that it's risky. It doesn't mean that I have to avoid it. Maybe I just only trade it with $1,000 or $5,000. I respect the risk by respecting it with position size. I give it less size, the riskier it is. And again, if I would have just respected, especially my initial entry, like why do I need to go all in right in the beginning? The beautiful thing about trading is that you get to decide how you can dollar cost average into a position. But I got too confident because of my track record, right? I didn't wait for true confirmation on the 5-minute time frame, and I went in with too much size too early on. Again, these are all concepts that we talk about within the LPP lesson library, but just like anything, we're human, we make mistakes, and these mistakes cost you more when you trade with more money. So although it is a significant dollar loss, $14,000, it's huge. I remember, I can go 2-3 months and that's the money that I made. And now I lost it in just a few hours. It's all perspective. It's all relative to the money and the dollar amount that you trade with. And this is why we always encourage beginners that when you're first getting started, start small so you lose small. You can't just think about, all I'm going to do is make money. That's just not how the market works. And that's not just how it works when it comes down to learning about any market. You're going to make mistakes and you want to be okay with making those mistakes. And you want to make sure that they don't devastate you or discourage you. And the only way that you can accommodate that is by staying and keeping that small position size. So when you do lose, you lose small and you can bounce right on back, right? So again, I'm really excited. I'm very grateful that we had one of our LPP members ask this question. And I hope that at least with those 3 tips about, your previous track record, time frame, and position size management is so crucial for traders of all levels. So you guys let me know down in the comment section what you think, and hopefully this could encourage you on the next trade that you take for this upcoming week to be more selective, pay attention to those timeframes, and wait for true confirmation and accommodate that position size so you don't take too much size too early on. Again, I do trade live every single morning. I'd love to invite you to my live trading. It's going to start off on Tuesday in observance to Memorial Day. Market will be closed on Monday, but if you want to watch me trade live as soon as Tuesday when the market opens for Memorial Day, again, we're doing 50% off LPP 2.0. It's a one-time payment, lifetime access, and you'll get to watch me trade live every single day. So if you want to tune on in, it's the second link in the description down below. And if you have any questions before joining, feel free to comment down below, or I also linked my Instagram and you're more than welcome to message me there. Like always, let's make sure that we end the year on a green note. Take care, team.